All right, hey there, traders. Sam here from TradeDevils-Indicators.com. I thought this was a good time to introduce, or perhaps reintroduce, one of our favorite indicators, and this is the wicked wave. Now, when we first introduced it, it was really prominently used in our Renko trading package, where it still is very popular. But I think it's underappreciated if you're only applying it to Renko bars and Renko templates. I thought I would just show you, since we've had some good trending behavior, well, certainly today and at the end of last week, just some ideas about how this might augment what you're currently doing. And we think it's very useful to the trader in terms of maximizing the potential returns on any trade that you're giving in, and it can be quite useful not only just getting into the trade, but if you were considering adding to a trade, it'll offer some signals along the way for continuation. You see these little continuation signals here. We'll go through those in a second. So let's just go over it. Essentially, it's an RSI, but it's modified. So it's a kind of a hot rod version of a QQE, which is the qualitative quantitative estimation. Just a horrible name for an indicator. So we prefer the wicked wave, but this is a really useful indicator, and we've just added some features to it that we think make it even more tradable and more useful to the trader. So let's just go over those very quickly. So as you look at it here, again, essentially, if you were to look at a QQE, you typically would find multiple lines. Well, here we've modified it and turned it into a histogram, but essentially the information is very similar. I just think this is easier to use for the trader. So there's a couple of key features here. One, let me start with the center line, because that's relevant to the moving average you see on the chart. So what we have here is a 20-period volume-weighted moving average. Now I've added this one here because it's color-coded, so it will match the zero line. So you see here, as soon as the volume-weighted moving average goes red, the center line goes red. Right? We go green right here, we go green, there we go green, right? And that just continues. So that center line is really quite useful, and it can be, for example, if I were to do this here, is something I will often show in our room as I'm talking to traders here, something like this, where we can really see where everything is quite nicely aligned here. So we've gone from the transition from up to down. Well, volume here, if we're just looking at the moving average, the volume has started to peak, and we have a transition period here. You see the transition period here reflected in the wicked wave, with the transition from a dark green to white, and then you'll see the RSI line, which is the top line that rides the top of the histogram. That's actually the RSI, and then the blue line is the smooth version of the RSI. So when we get right here, that's market is talking to you here. See, we certainly had a change. Now, of course, it's quite convenient, right, with the benefit of hindsight, to see that we rolled over, and despite the little potential transition here, we ended up, giving back what, a third perhaps of the move. So a decent little trading environment here towards the end of the day. Now, that would have been required real trading skill, because after that big move, it's easy to be anticipating that, all we're going to do is retrace and then go again, but we just run out of time. Now this is an RTH template here, so that we're not distracted by current market action, and I've got a 2-minute on here. Now if you look at this indicator unto itself, of course, in the benefit of hindsight, okay, well, when it's red, we're going to sell it. When it's green, we're going to buy it. When it's white, we're going to stay out of the market. Yeah, of course, I understand the benefit of hindsight trading and how that can be a bit dangerous, but you can start to develop some ideas with this that I think are quite useful. So I should note here, in addition to the QQE and the volume-weighted moving average, I have our initial balance on here just to frame the day so we can see what the market did. I've got our toolbar on because I use that all the time. So this sitting as it sits right here, I've got a momentum-based indicator and I've got a volume-based indicator. With price action skill, you've got a fully functioning, useful template you could work with right here. Anything you're adding here, choose wisely. Do you need to add something here? Well, let's go over a couple of the signals here that occur, and we had Oh, I'm gonna switch this a little bit. I'm in a 2-minute now, just so I can show you the whole day. Before we dig into the parameters here, let me just show you a couple of other applications. Now, personally, I like to have it color the bars. So let me show you that if I move over here. This is how I will typically tend to trade it. Yeah, I prefer to use it with Heikin-Ashi, which you'll recall when we first introduced it. Renko bars were where people were really gravitating to it, because it's a trending bar, right? So it's an averaging bar, but it can keep you in trends longer than you might if you're just looking at the natural back and forth of bars. So if we go over here, right? So if you look here, oh, you get a couple of down bars here. Are you worried? Here we're going sideways. Here the big pump bars. But when I go over here, this is green the whole way, other than a couple of transitions. Now I do have on here, as I've switched over here, having made the point about how the center line reflects the volume weighted average. This is our McGinley line here with squeeze indicators built into it. And interestingly, you'll note that for many of these, when we're in the transition in the white, which is a lack of momentum, suddenly, right, the squeezes tend to show up, right? And this is, you've probably heard me say this before, of all the indicators ever created, the squeeze indicator would certainly be in the top 3. RSI would probably be in the top 3 as well. So again, you've got a lot of functionality here just as this sits right here, just the wicked wave. Oh, and I would encourage you to have, if you're not using some way that you can identify when we see a squeeze, right? Because otherwise it's easy to get caught in that rotation. So what would I want to say? I think in addition to just keeping you out of an area that you wouldn't want to be trading because you have absolutely no edge in the middle of a squeeze, is when we come out of the squeeze. So note the color of the moving average when we come out of all of these squeezes. Right now here we're in transition. We come out, the moving average is green, and that's the start of it. A little bit of a red here as we go. This is actually the noon hour, right? So this is likely, right, if you're not in the States, right, this is where you might take a break. Or if you're in the States, right, this is we know this is often a period where the market gets quiet, and you see that reflected perfectly here, Monday the 22nd. Here's the noon hour, right? And now that's a good segue for me to focus in here on the chop zone, as we call it. So when we get the momentum gets between +5 and -5, we call it a chop zone. So the idea being, this is not an area you want to trade, right? And coincidentally, we got a squeeze. Now coming out of the squeeze, right? We're into the brightest green color, and you can think of the color shading much like an RSI getting potentially overbought, right? If there is such a thing. That is certainly a point where the trend is getting perhaps a little tired, right? So perhaps you'll see some sellers step in here as the market's had quite a rip here. Again, this is a 1 minute here, and you see while this is the Heikin-Ashi is going to distort actually the open. For those of you that are familiar with an opening range drive like this, well, here's the close of the Friday. So you can see this is, I mean, it's just a textbook day, right? It was just a really good day, I think, for most people. Here's the opening range low. So we define the opening range as the first 30 minutes, and the initial balance is the first 60. So as we're breaking the opening range low here, right? The opening range low here in this yellow line, well, it's a straight shot, right, to come and close the gap. I mean, that's... Even in the micros, right? You got 150 ticks, something like the 100. Oh, pardon me, more than that. 327 ticks to close the gap. Right now, that's a trade that is not hard to take. Now, note here, you'd be taking this here. The momentum is transitioning. So it's actually a good example here. The momentum is transitioning from up to down, right? But the up is distorted because of the gap. So just inherently, you know, the issues you have to deal with indicators when you're using an RTH template. So often good to have an RTH template so you can recognize the gap fill as it's happening or where it's targeted. But there will be distortion. So that's why it's often good to have. Well, let's see if I have one over here. Have them to be aware of that. So maybe you have one that's an ETH template and one that's an RTH template, right? So just giving you a couple of ideas. So here this would be over to a 1 minute without the Heikin-Ashi. I thought I'd show it to you in all of them. So you see, here's the same idea, right? We get the darker red, suggesting that we're getting a little choppy here. Now, these are not Heikin-Ashi bars, so you're getting, okay, just some indecision here, but note it's also squeeze. Now we come up here. Now the chop zone here is this blue section here, and that you can color code that to your liking. You can change all these colors to your liking, but I just want that chop zone to really stand out, so I don't miss it, so I don't accidentally take a trade where I'm in the middle of the chop zone here. Would be hard to do if you, unless you're not paying attention. But it just, again, the point is to be very much in your face. Hey, maybe this is a time when you don't want to be trading. But note, as we come out of it, as we come out of the squeeze, what's the color of the moving average? What's the color of the wicked wave? And then as we climb here, you see them as pretty good looking trend as we go up. At no point until we get right here as we're starting to fail do we get a red bar. And even that's a doji, right? And then we transition, and then the final sell-off here. So you can see here, this is a nice example. There's a big fair value gap right here that the market comes back to fill in, and of course your fibs would be useful to you here. That looks like that's likely a golden zone. I mean, these are little things you can do to augment. Oh, maybe we got it a little higher. These are things you can do to augment your trading, right? So looks like that's a 50 that. Got it, right? So as we fill the gap, pop a 50, and then down we come. If you're looking here, I don't know, are you trading that time of day? Maybe not, but just a good example here as we go. One thing you'll note is that we transition from white to the lighter red, and then to the darker. Same with the green, from white or in the chop zone to the bright green, and then as we get a little top heavy, or perhaps the trend gets a little tired, we go into that dark green. It would be the equivalent of an RSI getting up over 80. You know, perhaps time at the very least to be tightening up your stops just a bit. It's not that we couldn't just keep going. It's just kind of a bit of a warning that perhaps the trend is getting a little tired. And there's a little bit of a loss of momentum. So as you see, when we come up to the top, look at the range of the bars. Gets very, very tight, and then big bar, right? And we come down here and we make the transition. So big swing up, transition, swing down. This is really a useful indicator and can be quite effective. As I said, certainly you could use it just by itself here, right? Again, I've got volume, I've got momentum, I've got price action here. If I'm working with Heikin-Ashi candles here, right, I've got the trend establishment. Entry's a little bit different, right? So you have to have some experience working with Heikin-Ashi candles because of the averaging nature of the way the bars are formed. But I mean, it's hard not to see some benefit here. What I would encourage people to do, I think it's one of our most underappreciated indicators, is our manual backtester, where you can do this. Now, of course, when you're backtesting, when you're doing something with a manual backtest like ours, of course, you know what happened in the day, but it can force you to be very deliberate about your entry and exit. In fact, let me pause here, and we'll run through a quick example of that. Our manual backtest is really, I think, a very useful product. So I have it hotkeyed. So if I go F11 here, it's going to give me a sell signal. Now, yes, I can look here and say, okay, I know what happened. Right, so you have to be critical of yourself and be realistic. Would you take this trade? Would you take this trade right here coming out of it here? I would probably wait for a good clean entry bar here where I have no wick on the backside of it here. So something like this with what have I got? I've got 100 ticks here. So on a micro, that's a $50 stop. So right off the bat, right, almost no stress. Just went straight to your target. Target being the prior day's close. So we fill the gap. Now here, so you can see here, I'm not cherry picking the perfect entry, right? You likely, even if you went market, a little slip, maybe you went limit and waited for a little kickback here, but there's one decent entry here. Now here, often, as is the case with any indicator or just price action trading, it's not the first move really that we want, right? Because it's too easy for that to roll over. It's the second move, and that's where this is such a nice example here. So you see the little continuation here, and essentially all what it's doing here is the RSI has gone positive here. We've had this push here. We get a fractal at the top. I should note I've got fractals on here. We put a fractal pivot in, then we retrace, then we go into the transition. Now we do not overlap the smooth RSI, the blue line. We don't overlap it. So when we go back up again and the bars start climbing, the RSI is climbing again, that's what creates the transition signal. So could you go again here on the way coming out of that? Well, this is it's kind of a practice, but it's building muscle memory. So if I do it this way and I say, okay, well again, am I gonna get the perfect fill? Probably not, right? So coming out of it here as I see that right there. Okay, I got my $100 stop. A target would be the open. I mean that's what I would use. Okay, well I got 2 trades. We got $194 trading 1 lots micros. Same thing here. Could you do it again here? Right, we're coming out of the lunch hour. Boy, that's pretty good momentum. Again, just an F12. You want to preset these. I have it set for $50 of risk to the IB. That's as far as I would take it, right? Because I know there's going to be resistance there. Right. So just a couple of quick examples here. There's, trading 1 lot. So I know. You got to be hard on yourself. Because it's easy to say, oh, of course I would take that. Of course I would take that. So there have to be conditions here. So coming out of a squeeze would be one, right? I've shown this before in other videos, right? It's, I think, one of the best signals you're going to find. Here's another one. Now note here, so we get a continuation signal as we're in this sideways zone here. I'd probably wait on that, and then here comes the squeeze. Now you wouldn't have known the squeeze was coming, but given that price action, sure looks like, oh boy, that's just rotation, right? It's just up, down, up, down, up, down, and then we start to go. Now here's the trigger. Right, that little triangle here is the continuation. Here you can't see the C, it's underneath the squeeze. So again, let's assume you don't get a perfect fill. So off of the second entry bar here, there's no reason here. We've just gone sideways. Now if it went to a red bar, I'd probably get out. But another squeeze, right? No reason to get out, and my stop's way down here. Do I need anything? Anything that's more continuation? Do I want to add here? Why? I don't know that I would want to add here. You may not get the top here. Let's be more realistic here and say you went out here as the market started to come down. But so that's actually a good example as well. I'm getting continuation signals here with the dark green. So I mean this has been quite a trend, right? In the very, very tiny bars. Do I want to push my luck here? Probably not, right? But so just 3 trades. I know that's. We got there. There's 400, right? So coming out of the squeeze, could you do it again? Again, I would propose to you, it's not the first break that's as desirable as it is the retrace. That's the one you want right there, right? You pretty much your mind's eye always wants to be thinking this in the market, right? That's what it does, right? So it's this. It's not the first one, right? That's the higher risk. It's the second one. So here's just a great example. We come out of the squeeze. Well, you might have taken that one, but let's assume you didn't, because look down below. You're in the chop zone. Now I get a retrace here. Now I'm coming out of the chop zone here. So let's do another one, an F11 here, right? Could you take this one here again? Let's assume you're not going to get a perfect fill. I would wait for that good candle here. So let's just use that, right? So IB high would be my target. Pretty easy, right? I mean, is there anything to get you uncomfortable there? Now, I know when the bar is forming, right, that can be a little tricky, but that's the point. And that's why a manual backtester is so good, because once you take the trade, you can't change it. Right, but if you're doing that kind of manual backtest, don't be easy on yourself, be hard on yourself, but build that muscle memory of saying, okay, could I take the entry? Do I recognize a good signal bar? If I don't recognize a good signal bar, then I could use just the break of the fractal. Here, let me do it this way. You might say, okay, I use the break of the fractal, right? If that breaks, it could be over here. It could be, oh, the break of the fractal, and then when I see that retrace, right, if I can get that straight, here's the break of the fractal, little retrace, right? And then I break the second fractal. Now here we're into the day. This is over a 1 minute. Another way that I would trade it is I know this is usually fairly good because we can track the average ticks to approximate a 1 minute in the NQ. It tends to be about 2,500, it's between 4,000 and 2,000. So this is not bad. So if you went into Hikinashi candles, here's the lunch break, here's the push, here's the fractals. So if you wanted to, again, just to use this as an easy example, if you wanted to use the break of the fractal here, okay, well now you're coming right into the IB, right? That's natural resistance. On this day, the trend is so strong, it just blows right through it. That's not a trade I would take, because I know, right, that was the first test of the IB. But when they want to break it, right, it really shows. If you're looking at a footprint chart, you could have seen that was a massive bar that went right through, because of course, the algorithms know that there's a sell side algo that's there to fight them on both the IB low and the IB high. Here, coming down to the IB low again, right? Here's the squeeze, right? Are we back in? Is it this is not the trade, right? This is hindsight benefit, right? It's this trade. That's the one I want. Now look, as I look down below, I've come out of the chop zone. I've got a green RSI. I get a little pullback here, but I do not get, right, if you're using the color coding here, I don't get a red candle, right? So it's just transition. It's just a pullback of momentum. I hold the 21. This is a 21 McGinley. Would be very close to the volume weighted average, right? The volume weighted average, if we look underneath, goes white for just 2 bars and then goes green again. So volume again is increasing. That's the trade. It's the second one, not the first one. It's this one. That's the trade, right? And those things are annoying. Kind of the same thing here. You can see it again. You always want to be thinking in terms of swing, retrace, swing. So here's the swing. Here's the retrace. There's the next one. That's the pattern. Your mind's eye. I would propose to you, right? Will help you if you're always thinking, where are we in that series? It's constantly putting together a series of threes, and then threes get connected to more threes, and so. Oh, you could, let's see. Here's a good one, right? But again, it distorts a little bit with a Heikin-Ashi candle. But if you think about this here, now I break, it's the pullback. That's the one I want. Let's go to a different day here, because this is all fresh in our mind. Same thing here, right? It's not unlike it here. This was just a stunning, right? This is right to a golden zone here, but that's the IB low. Right to it, right? Natural resistance, right? So it's not this trade, right? That's hindsight. It's this trade. This is the trade you want to look for, right? It's not this one. It's this one. We come back now. I come out of the squeeze. Look at the signal bar. Look down below, right? So the volume weighted average goes red. I know, right? If you're right here, it's like this, right? Could you enter on that candle? That's what it's going to look like. Could you enter on that? On the break of that fractal, or just the signal bar, the strength of that signal bar. I know, easy in hindsight, but again, it's a good exercise for any trader to build this discipline. Okay, so if you're looking at that, can I take the break of the fractal? Do I get a good signal bar? I don't want bar with wick on it, right? I want this kind of, if you know Heikin-Ashi, right? I want this kind of a bar. Oops, did I get that? Let me do that again. F11. There's the break of the fractal. Let's assume some slippage. Oh, I'm sorry. I don't have it set. I don't have it on this one. I don't have the manual backtest. It's over here. Oh, but I think you get the idea. Have to apply it, right? I mean, that's 1 lots, micros. I know, hindsight, right? But just to try it, right? A little practice. I think you'll find it. You'll be well rewarded with that. Again, it's just personal preference whether you like the trending nature of Heikin-Ashi bars. Not everybody does. But I'm here, right? Is it easier or harder for you here, right? I mean, that only you can decide that. But as you're looking here, the down bars here can, am I nervous here? Am I going sideways? Right? I mean, it can be useful to have that color coding. And of course, if I color code it, what did I do here? This one is 2 minute. Here, if I color code here, this is Heikin-Ashi. What's this one? This is Heikin-Ashi. Let's go out of the Heikin-Ashi, and then I'll wrap it up here. Let's go to a 2584 tick, right? So we'll take off the Heikin-Ashi and just look at it here. Again, this color coding can be quite useful, because here we were just looking at it, right? Now, one thing I will note here, when you're using, let me get all this stuff off here. When you're color coding, it wouldn't matter if it was our indicator or any indicator. If you're letting the indicator color the bars, it's useful to go to a hollow or well, we would call it the TDU hollow, which is similar to the think or swim. Oh, that's not what I want. I want I want the TDU hollow candlesticks, right? So I can make that distinction. So I know that a hollow candle is an up bar and a solid candle is a down bar. So I can look here and say, okay, well, there's a couple of down bars, right? And now am I worried about that? Are you worried about that? All up bars, a little sideways. I can see the down bars here, right? So I can see, right? And when you're launching here, I don't want to see a whole lot of up bars here, but I get them, right? Again, this is not Heikin-Ashi, so I can see I'm getting up bars, down bars, right? But it's all that same color. Particularly for people if you're struggling, this can be just a nice way to keep you in the trade, or get you in the trade. Just some ideas to consider. All right, that's probably enough here. So I'm going to wrap up here. Hang on, I'm going to go into the indicator. Just in conclusion, here's the properties here. Oh, it's a 14-period RSI. This is the default. Right, now you can tweak this to your heart's content, but this is not a bad place to start. One thing I've changed from the default is making the chop zone a dark blue, because I want it to really stand out. And same with the chop zone lines, the warning lines. Now you can make them yellow, red, whatever you want. I just happen to like it in blue because it stands out to me. And then here, just the color coding here. But this is what I wanted you to show you here. So I've got an RSI period of 14. The smoothing is a 5. So you can think of it as a 14.5 RSI. The momentum smoothing, right? That's kind of the key to the QQE. And then the exhaustion threshold, that's when we get to, with the exhaustion threshold, when we go to the darker colors. Paint the bars, yes or no. Zero line crosses, right? Do I want to see an X when that comes? Do I want it to fire an X? And all of these can be alerted as well. If I'm firing from below 0 to above, alert me. If I get a continuation signal like I get right here, alert me. If I'm in the chop zone, alert me. If I break out of the chop zone, right? Now, that's, again, you may not want all of those to fire. I'm just kind of showing you that they're there. Can be very useful, right? So as we look here, oh, let's go back to another day. Anything in the early part of the day, the color coding can help. Like here, look, these are pretty nice, right? So here it's not the first move, it's the retrace move. That's the one I want, right? And then it's the retrace move. And then here, now look at the angle, right? Now I'm retracing, but look how we're starting to go sideways here, and then we end up in a squeeze. Now we get on the other side of the squeeze. Here, right? Maybe not. That's the one, right? We're getting better, right? If you're still uncomfortable, now squeeze, 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 right? Now here we come out of the squeeze red, but we're white here, and we're in the chop zone, right? So, oh, maybe I don't want. Now we come out of the squeeze, right? Out of the squeeze, green, coming out of the chop zone. Again, right? This was, I remember this, right? Right to the IB, right? And that's, if you measured it, that's a perfect golden zone right here. But again, it's not the first move you want. This is the high, I mean, of course, in hindsight, oh, how great, right? I'll take it right here. This is, you're going to get stopped out as many times as you're going to get your target here. You want to be careful with this one. It's the retrace move. That's the one you want. Right now, oh, you're in a squeeze. Okay, well, I'm not taking that one. Could I see a signal bar here? Or could I do it this way? Might look at it and say, oh, here, give me a flat line, right? Right, could you take the break of the fractal? Now I know, right? You know, you can see what's coming, right? So your subconscious, right, is a factor there. But the manual backtest is still useful because it'll build that muscle memory. Okay, can I take, because it's objective. You can be objective here. Can I take that break? Well, first, do I want to take that break? Right, I'm mighty close to the low of the day. That's where the hindsight, right, or knowing what's coming can influence that decision. But if you were right here, are all the conditions met right here? I'm right here. Are all the conditions for an entry, right, per whatever your rule set is, or I'm just giving you a couple of simple ones, right? Okay, what's the color of where's the volume, right? Red. Momentum, red. The RSI is beyond the signal line. In this case, the McGinley's red coming out of a squeeze. Bars are red. Why would you not take that? Well, I suppose the only reason you might be cautious there is because you're at the lows of the day. You could wait. There's a little pause. But the longer you wait, now note we get into the darker colors here, and the market starts to roll over. We go sideways. We go for the angle is always something to pay attention to. Now we go into rotation, rotation, rotation. Right, the day ends. This is the trade, right? It's this one. Just to re-emphasize it, right? It's the retrace. It's the second one, not the first one, right? Just like right here, it's the second one, right? That's what kicks it. Okay, some things to think about. Hopefully that's helpful to you. Just like all of our indicators, you can trial these for a full week. So you get a full 5 trading days to trade with it, right? So 7 days, right? If you picked it on a Wednesday, you will get your 5 days of trading. I really encourage you to take a look at it. And then if you don't have it, or if you haven't trialed it, manual backtest it. Use that manual backtester and just create your own conditions, right? So break of the fractal. Can I take this trade? Here's the fractal. Can I take that break, right? Again, look below, right? Is everything in alignment, right? Am I below the moving average? I'm breaking a fractal. Is the volume negative, right? Is the RSI below the average line? Are we, right? Are we heading lower, right? And then we flatten, and then we come back the other direction. Right? Really useful indicator. Okay, with that, I'll wrap it there, guys. Okay, let me know how you think of it.